Good evening, everybody. Nice summer evening. We did the dynamic doji not too long ago, I think back in the early part of the year, but there is a great relevancy in doing the dynamic doji because the doji alone would provide more trades and more trade setups than most people can handle. And it has a great I want to say, not flexibility, but a multitude of different elements that help you uh, do. Where's the video on the beach show? That's uh, that's on YouTube, isn't it? You need a costume to do the dynamic doji. No. Yep. So all right. So here's what the this is leading into is quite often on sessions like this, we go through and there might be 20 or 30 good looking charts. And everybody, or not everybody, people ask, well, how do you narrow it down to the best ones? And that's what the top rank signals and patterns do for us, which basically takes the information that we have in candlestick signals and the patterns. And then there's about 14 or 18, I can't remember the correct number, of which ones work the best in combination with each other. And so from that, I tell people, do not your video updates with palm trees in the mountain. Oh, just the palm trees. Yeah, that's, I travel around quite a bit. I'm just kind of a traveling kind of guy. But so what I have been professing to people now for basically the last year is don't try to learn all of them, all the signals and patterns. Now, first of all, you want to learn all the signals, the 12 major signals. That's your bread and butter. The patterns aren't that difficult to learn because there's only 6 or 8 of those, and they're very visible once you understand them. But instead of trying to learn the 14 or 18 top ranked signals and patterns that are the most powerful ones, and I've got them put in quantitative order with the best one, and the best ones use the doji with the concept of anytime you have a doji in a multi frame pattern, it's usually going to work better than the same pattern but without a doji. So the doji kind of compresses the investor sentiment to where when it starts moving one way or the other, it works a lot more effectively. So here's, so this is the prelude. We will be doing a full day training session, which is taking all the information that you should be learning on how the probabilities are greatly in your favor based upon the signals and the patterns. And then how do we combine them? Not how do we combine them, combining the ones that make the most sense as far as not only high probability reversal situations, but high profit reversal situations also. Okay, so with that, the doji is one where you probably want to, you can concentrate a lot of your analysis because, as I say, just the doji pattern setups alone will provide more good profit trades. Oh, is this too loud? Again, I think last time we did this. Let's see if I make it a little bit softer. Is that? And if you have problems with the connection, there's a little red X in a circle up to the very top right part of your screen. If you go up there and click on it, it'll drop you off and then come right back in, and you'll probably have a better connection. Okay, the dynamic doji. We know the basics of candlestick analysis, which again is the 12 major signals. We always have the doji listed as number 1 because it's the most recognizable one. It basically tells you or shows you there's a kind of a cross. It opens and closes at the same level or very close to the same level. If it's a small trading range, it's the doji star. Big trading range, it's a long-legged doji. If it opens at the top, trades down, and closes at the top, it's called the dragonfly doji because it looks like a dragonfly. And the Japanese explain this one as a gravestone doji because they say the warriors came out of camp, went into battle. At the end of the day, they were beaten back into camp, leaving their dead all over the field, thus the gravestone doji. You do not show the candlestick, do you? How can we understand what you are teaching? Tong, I don't understand what that means. You do not show the candlestick, do you? Tong, I don't understand what you're asking. Oh, if you're not getting a screen, make sure you go to the top of your page and you're not on slides, that you're on screen sharing. Is that the problem? Yes, so I'll, tonight we have rec recording because Jim goes to his investment meeting there in New Jersey. So no matter what you're looking at as far as the dojis, it has one piece of information that's very relevant. There's indecision between the bulls and the bears. The spinning top is a doji, but with a little bit bigger body. It looks like a spinning top. Can you explain each? Peter, we're only doing one, and that's the doji. Can we explain each what? Each signal? Again, we're just concentrating on the doji tonight, which is any of these. So there's 12 major signals. Oh, you want me to go back up and explain each one? No, that's what you should be doing. And this isn't like learning 40 different signals. There's 6 longs and 6 shorts. Again, we're just going to be concentrating on the doji tonight. If I see other signals as we're going through, I'll explain them. So, the dynamic doji. The Japanese race traders had simple rules. If you see a doji at the top, get ready to sell. If you see a doji at the bottom of a trend, it needs bullish confirmation, or the Japanese rice traders are saying that the weight of the market could continue to push the trend down. Always pay heed when you see a doji, because that means there's indecision. But here is the most important one we call the doji rule. The trend will usually move in the direction of how they open after a doji. Yes, on the time frame, we're going to be looking at daily charts. But remember, candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. That means they work just as effectively on a 1-minute chart, 5-minute chart, 10-minute chart as they do on a daily, weekly, or monthly. It all depends on the time frame you want to trade. Was your signal list in order of their strength? No, Lee. It was just the list. There was 50 or 60 candlestick signals. I've narrowed them down over the last 40 years to the 12 major signals for two reasons. One, you don't want to spend all your time and energy learning signals or the 50 or 60 signals when most of them you won't ever see, or you will see so rarely that you don't want to spend your mental time and energy learning those. The 12 major signals are the ones that occur most often, and they provide the most probable reversals. So the next day in the morning, how long do you wait to see confirmation? It depends on what time frame. If the market opens at 9:30 and I see a bullish reaction, maybe it's 90 seconds if the market's opening in the correct direction. Doji rules apply to spinning top as well. Yes, a spinning top tells you the same thing, that it is indecision between the bulls and the bears. It just happens to be the body's a little bit bigger. Okay, so if you use the basic rules of candlestick analysis, or what the Japanese rights traders have illustrated to us, where do most people buy? They buy exuberantly at the top. On my charts, for the new people in here, you're going to see the red line. That's the 200-day simple moving average. The blue line is the 50-day simple moving average. The reason we have those on our charts is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. A lot of people say, well, why don't you use the exponentials? Aren't they a little bit better? We're not using them to make our decisions. We're using them to see what everybody else's decisions are at those levels. Then another simple concept that the Japanese rights traders tell us about human nature is, where do most people buy? They buy exuberantly at the top. I use stochastics of 12.33. If it's above 80, you're in the overbought area. If it's below 20, you're in the oversold area. So the concept is real simple. If you see exuberance at the top, and you see a sell signal or a potential sell signal, the Japanese rights traders say the probabilities are pretty strong. You're ready for a reversal. If you see a candlestick buy signal in the oversold condition, the probabilities are pretty strong. You're going to see a reversal. So when you start seeing this exuberance, there's your doji. What's the doji tell us? Up here in the overbought condition, away from the T line. And I should explain the T line. That's where do most people buy? They buy exuberantly at the top. That used to be me. Now I'm looking for the sell signals when these indicators are now getting, not sell immediately, but if you see a doji, remember what our doji rule is. It's going to move in the direction how they open after a doji. So if you're that far away from the T line in the overbought area, and it opens and starts trading lower, where do you think the first target's going to be? At least back to the T line. It doesn't matter what color the doji is. The doji itself is a very small body. It doesn't matter whether it's a red or green body, if there's any body at all. What's important is the fact that they opened and closed it right about the same level. Now, before I go further, the T line is this black line. It's the 8 exponential moving average. This is the most critical piece of indicator you want to have on your chart, which basically boils down to the fact that if you see a candlestick, the candlestick signals are the graphic depiction of human nature. And the T line is like a Fibonacci characteristic. It acts like a natural support and resistance level of human nature. So the concept is very simple. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. If you see a candlestick sell signal and a close below the T line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. With the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it, which makes the signals that much more credible up at that level. Do you enter, sell below the doji? You can. If you were long, you'd stopped out at the low of the doji, or that'd be the worst case. You might have closed out your position as it opened lower. So this is the simple rules. This is not magic. This isn't any voodoo stuff. This is what the Japanese race traders have illustrated. Too far away from the T-line, you can see it. It doesn't have to be a percentage. You can see that you've moved a lot further away from the T-line than what it normally does. Susan, you can put whatever you want on there, but the 8 exponential moving average, I used to make good money with the candlestick signals. Now, I say good money. I was the worst investor in the world. I was even a stockbroker for 8 years. And I was the one that was buying up here and selling down here. When candlesticks came along, everything that I looked at said, this makes sense. So if you wanted to, so everything we've thrown on here right now is from years of using it and it being very good indicators. If you want to put the 10 simple or the 5, do whatever. If it works, fine. If it doesn't, the nice thing about candlestick analysis is we know that the signals work. There's an easy rule of Wall Street. If something doesn't work, it disappears very quickly. Candlesticks have been around for 400 years. Yeah, so you can, if somebody says put the XYZ indicator on, put it on. If it works, keep it there. If it helps you improve your probabilities of being in a correct trade. If it doesn't work, take it back off. When did candlesticks on computers start? Oh, I want to say in the late 80s, maybe early 90s. Because when I first learned candlesticks, I had subscribed to a chart service out of California that would send me a booklet of charts, and then through the week I'd use my mechanical pencil to draw the little figures. So by the end of the week, the right-hand side of my charts looked like chicken scratch. And then at some point they came on. I can't remember when it was, but I was happier than a pig in doo-doo when they did. Okay, I'm just making sure I'm getting everybody's questions. So this is what is built into candlestick analysis. Where do most people buy? They buy exuberantly at the top. We see a doji up here. What's that tell you? They finally hit a level where there's indecision between the bulls and the bears. If we were long, what would we be doing up here? Getting ready to take profits. When they gap up in an overbought condition, get ready to take profits. What's happening here? This acts like a neon sign to show you there's indecision. Get ready to close out the position. The doji is the most recognizable signal. It basically tells you the bulls and the bears have found a level where they're fighting and they're closing right about the same level they opened. And then you use the doji rule. It's going to move in the direction of how they open after a doji. So if it opens lower, where do you think your first target's going to be? At least back to the T-line. Again, if a doji means indecision, long-legged dojis means more indecision. The bigger the price move. And the doji rule, the price will usually move in the direction. Now remember this. This is one of the important rules that will make you a great amount of money. The price or the trend will usually move in the direction of how they open after a doji. So if I see a long-legged doji, remember, that means massive indecision. And what's the rule? If they open it lower, that's the new direction. Your teaching is very poor. It does not go to the point and take so long about it easy thing. Tong, I'm sorry. I've been teaching for 20 years, so probably set in my ways. 1 minute daily chart. Yeah, you can use whatever time frame you want, and I'll show you how that works effectively. So look what happened a while back in Tesla. How long did you hold on to this? As long as it didn't close below the T-line. When did something start changing? When they gapped it up, what was happening? Where do most people buy? They buy exuberantly at the top. But when they gapped it up, what was this telling you? Well, the red flag was, look how far away you are from the T-line. And what's our simple rule? The further away you move from the T-line, the higher the probability it's going to come back and test it. So where would we have taken profits if we used the Doji rule? Right here. We would have given up a lot of profitability. So the fact that we were this far up, away from the T-line, gave us the inclination to move to our 10-minute chart. And as it kept moving up, you put your stop below the 10-minute T-line. Put your stop below the 10-minute T-line. Put your stop below the 10-minute T-line. Put your stop, whoop, you're stopped out right here. Why? Because the 10-minute chart, which was still a functional daily chart, the daily chart says you're way too far away from the T-line. It's going to come back. When is it going to come back? Use your 10-minute chart to tell you when to take profits. So if you're looking for reversal signals, first of all, you're looking for, let's say, a candlestick sell signal. You want to see if there's signs of exuberance at the top. Is the price moving too far away from the T-line? And if so, you simply use your 10-minute chart. So again, up here at the top, a long-legged doji. If it opens lower, you should be out. If you were sitting here watching it, when it was up here, what were you doing? You knew you were too far away from the T-line. You're flipping to your 10-minute chart. At the bottom of a trend, there's your doji. Where do most people sell? They panic sell at the bottom. What did we see? We saw a doji. If you see a gap down in the oversold area and you see a doji, you get ready to cover your short or ready to go long. The fact that they gapped it up, what's the rule of the doji? It's going to move in the direction of how they open after a doji out of the oversold area. This right here is what they call the abandoned baby. It's a one-day island reversal. That's what starts your uptrend. Anytime you see a doji in a multi-signal, there's your bullish harami with a doji. There's your evening star with a doji. It makes that following trend much stronger. Okay, let's see. Let's see. All right. Yep. Let's. Yeah. I'm going to go to Susan. I'm going to go to live charts when we get done with the PowerPoints, because I'm going to show you. A lot of people say, well, it's always easy to see the reversal afterwards. So we go through enough charts to show you what to be looking for to get ready for that reversal. The T-line mean 10 moving average, it's the 8 exponential moving average. So here's the doji, followed by a gap up. We call your best friend. Why do we call it your best friend? Because it not only produces an extremely high probability that you're going to be in an uptrend, you're probably going to be in a very strong uptrend. Because if you dissect what happens in human nature, if that tells you there's indecision between the bulls and the bears, and they gap it up the next day, what's that tell you about the indecision? It's not there anymore. The bulls have definitely taken control. Yeah, don't pick on Kong. He's maybe expecting more than... Nah, I can't. I've been investing for 40 years, and the reason I've stuck with candlesticks is no matter what investment technique or whoever you're following, candlestick signals are the most accurate as far as telling you what's actually going on in investor sentiment. So downtrend, if they gap it down, start looking for a reversal. If they gap it up from a doji, that's your best friend. And notice what happened here. Remember our simple rule? If you see a candlestick buy signal and a close above the T-line, you're in an uptrend until you see a candlestick sell signal and a close back below the T-line. And if you add the concept of distance from the T-line, the further away you move from the T-line and see a doji, where do you think if it opens positive your first target's going to be? At least back up to the T-line. Yes. So if you hold on to your individual, no, Mike, I was drug in as a, what do they call it when your parents went there? So let's see. Whoops, hang on. I got to get this lined up. Not an abandoned baby because it didn't gap down on this side. This is the important side when they did the gap up. We're going to get to this in a little bit. Look what happened right after that. Another doji. This is what you call a doji sandwich. This is actually what you call a McMuffin, because a doji sandwich is a large candle followed by a doji. If it trades positive the next day, the magnitude of this candle is usually going to be the same magnitude of this candle, with the doji sandwiched in between. We call this a McMuffin because if this is your morning star signal, which is one of your 12 major signals, and it's followed by a doji sandwich, again, your morning sandwich, that's your McMuffin. That's an extremely high probability, extremely high probability. If this is a reversal signal and the doji sandwich implies there's more upside, that's just a double guarantee that this uptrend is going to be starting. When we called the bottom, and it wasn't because we were any soothsayers, on early March, it was because there was a McMuffin pattern setting up in the Dow and the NASDAQ, which tells you there's been a drastic change of investor sentiment. But it did pull back. What pulled back? Right here? Well, let's see. after the sandwich? Oh, yeah. But remember, each day is not going to go straight up. And what can you assess from this right here? One strong truism. They couldn't close it below the T-line. Now, if they'd opened here and traded here, yes, they close it below the T-line. But as you look at this chart all the way up to here, they could never close this below the T-line. Yes. So, yeah, and that also is the other indication that if this is a very strong reversal signal, we assume that this is in an uptrend unless it closes below the T-line. So you can use the candlestick signal, the doji. Again, the reason we're concentrating on this is we're going to go through charts here in a little bit on the live charts that will show you that you'll have more trades than you'll ever be able to handle, and they're all going to be relatively good trades. Now, I should quantify that by saying most of them, a high percentage, are going to be a good trade. Enough that when you see it, you should take advantage of it. So again, there's your morning star signal, or your best friend, followed by a doji sandwich. Now here is a very important factor. Look at the doji that closed right on the T-line. Just the simple logic says we're looking for a buy signal and a close above the T-line. So if it opens positive the next day, what type of signal were we expecting? A doji sandwich. If it opens positive, what's it telling us? It's probably going to move in this direction. What's that tell us about the T-line? The T-line's not acting as resistance anymore. Look for the next target. Same scenario up here. You see a gap up in the overbought condition and start seeing a doji. That tells you the simple doji rule says if it opens lower the next day, you close out the position. A hammer can be a doji, or you could call it a doji hammer. It doesn't matter what you call it. It's still representing the same thing. It's a hammer and a doji, a day of indecision. You don't have to differentiate a doji from a hammer. A hammer would have a little bit bigger body. So you're still looking at it from the aspect that this is doing a doji and a hammer type signal. Both of them are potential reversal signals if it opens positive the next day. So don't get hung up on what the actual terminology is. Just see that that's a signal, whether you want to call it a hammer or whether you want to call it a hammer doji or whether you call it a doji, it doesn't matter. It's still telling you down here in the oversold area, if it opens positive, it's probably going to be trading positive. This is also allows us to know exactly what happens after your best friend signal. We know there's going to be more upside. And that upside is kind of calculated or visualized as what we call the 45 degree. And what does a 45 degree tell us? You can stay long as this stays above the T-line. You're taking profits up here. So the important aspect is we're not trying to buy at the very bottom and we're not trying to sell at the very top. We're trying to get this fat part in between with a high degree of probability. The more correct trade or the higher your correct trade ratio, the more the compounding effect is going to be helping you out constantly. I don't know what a doji means. I've never looked into it. I know a bullish harami means pregnant woman, if I can find one. Yeah, I'll have to check to see what a doji actually means. So you can use the doji in what we call the left-right combo. The best friend is your strongest signal. The best friend signal is right behind it. It's a doji followed by a bullish engulfing signal. left right, a little left jab, roundhouse right tells you there's been a change of investor sentiment. This chart we made a lot of money from, but the reason I have it up here is because it's the most illustrative, easy to understand chart of all of them. Look what happened right smack dab on the 50-day moving average. Indecision, then a bullish engulfing signal. Tells us exactly what's happening. That's where they're buying. It opens positive the next day, pulled back a little bit, but right in here you could be buying because you had a strong buy signal, you're in the oversold area, stochastic's coming up, and you've broken this downtrend. What's the probabilities of your next trend? Probably wave 1 over here, wave 2, now going into wave 3. Oh, Doji means blunder or mistake. All right. No wonder my wife keeps calling me a Doji. What about? I think we bought right in here. Again, this was a signal, and this was our buying point. So above the moving average, yes, the T line. This was the 50. I mean, everybody in the world uses the 50 on their charts. So we could see exactly what's happening right at that level. Or we can see exactly what's happening right at the 200. There's your bullish left-right combo in the oversold area. This just makes it so simple to know the probabilities based upon a bounce off the 200, the left-right combo, stochastics coming up, you're in an uptrend. Again, I keep telling people this is not rocket science. This is just identifying what the Japanese rice traders have illustrated to us for hundreds of years, using the analogy that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And the candlestick charts are merely the graphic depiction of human nature, telling you what they're doing or what they think about whatever news or information they have to react from. When I register, I got a URL, password, found the only works for Microsoft Edge, but won't work in Chrome. Is airways. Harry, that's a technical question. That's, I think they're doing this Omnovia or Webinato without having to use the flash. But if you email Abraham at candlestickforum.com, he can help you with that. At the same time, all right. Thank you, Phil. Dragonfly or Gravestone Doji is when there is no body, but it's close to the top or the bottom. Yes, but it still represents the same thing, indecision between the bulls and the bears. Ahmed, hang on to your individual ones until I tell Rick to do the double line. And then, because we're going to be way late tonight, just do one request for each person. Okay, so the Doji sandwich has expectations, more upside. So anytime I see a Doji sandwich, look at our bullish engulfing signal in the oversold area. For somebody that wanted some of them explained, a bullish engulfing opens below the previous day's close and closes above the previous day's open. The body completely engulfs the body of the previous day. That's a bullish engulfing signal, one of your 12 major reversal signals. Hold on, I'm going to get a drink here. Then you see the Doji. If it starts trading positive, what can we assume? That this day right here and this day right here are going to be the same. Your first assumption is it's going to be up. Your second assumption is it's going to be above the T line. You're in an uptrend. Bullish engulfing. Doji sandwich. Closes right here on the T line. If it opens positive the next day, what's it telling you? It's confirming the bullish trend of a doji sandwich, and it's not resisting at the T line anymore. And your stochastics are still coming up. You're not in the overbought area yet. There's your best friend signal, followed by a doji sandwich. Again, a doji hammer type day right on the 50. If it opens positive, what's it tell you immediately about the resistance on the 50? It's not there. Look for your next target being the 200-day moving average. So the doji sandwich versus the bullish flutter is just a minor difference. A bullish flutter kicker signal is, look how it opened here and closed here, a dark candle. The next day they gapped it up and did a doji. And again, the simple doji rule says if it opens positive, it's going to trade positive. That gives us a bullish flutter kicker signal. And the reason we call this a bullish flutter kicker signal is if you took out the little doji flutter, you basically have a candlestick kicker signal, which is your strongest reversal signal. Same scenario, bearish doji sandwich. It's going to create a strong down move, especially below the T line. The double doji is when you see an up move and then you consolidate. Indecision, indecision. Then the third day they take it back up. That's a very strong signal. We use that for our recommendation here on GSX. Came up, did a doji. If it opened positive the next day, kind of a double doji sandwich, that's put us in a very strong price move that we're still sitting in. So anytime you see it, whether it's in a stock or an index or gold or the dollar, it all works the same way. There's your double doji setup. Notice what happened when they gapped it up. Told you the T-line was not acting as resistance anymore. Stochastics coming up. What could we assume about the trend of the Dow? It was going to be positive from here. So the doji setups allow us to make very simple assumptions. If we see a doji right here gapping up, if it opens positive, what do we have going on? One, it's going to trade positive. Two, it's going to be doing a bullish flutter kicker. Three, there's a gap to fill. We can now analyze what everybody else is watching. Where do you think our next target will likely be? All the way up here to the 200-day moving average. Do you buy on the doji? No, because the doji is just, it's telling us to get ready. The doji acts like a gauge. So when you see a doji, you know the simple rule. It's going to move in the direction of how they open after a doji. If this opened positive, we're buying. If this opened lower, what's it telling us about the T-line? The T-line is still acting as a resistance. You don't want to be in that trade. I meant, do you buy stocks on the doji signs? Yes. Yeah, that's what we're doing, is buying stocks. Or trading options. Essentially, we're just analyzing what the trend of that individual trading entity. So if you see a doji, now you've got immediate information. You know exactly what to do after a doji. So if you see a setup like this, which is our J-hook pattern, and you came right up to the resistance level, if it opened positive, which way is it going to go? Positive. Probably a doji sandwich, confirming our J-hook pattern. If it opens negative and trades down, what's it tell us about our J-hook pattern breakout? Telling you this level is acting as resistance. You don't want to be in this trade. If AMRX goes up, does that make it a flutter kicker signal? Yes. Yeah, with this opening here and closing here, if it opens positive, you put it in the category of a bullish flutter kicker. Okay, let's see if I'm... So this is what we want to see at this level. We want to see it open positive. That puts us in the right direction at the right time. Now, I say the right direction at the right time. The advantage we have with knowing exactly what should happen after a doji allows us to enter a trade right here, knowing it's got the probabilities of adding up. And two, we don't have to be waiting around for days or weeks to see if our trade's going to work. We're going to see immediately whether that trade's going to work. Enter above the doji. You could do it. You could either do it on a positive open. Now, that positive open would be probably influenced by the fact that maybe the market itself is opening positive and the stock that we're watching is opening positive. That's a good incentive to get in right away. Or if you want to be a little bit more conservative, yes, you could wait for it to come up through the high of the doji. The doji works on all time frames. This could be a 10-minute chart. This could be a 1-minute chart. This could be a weekly chart. It's all going to look exactly the same. Where do you put your stops? Another good benefit of candlestick signals is if this opened positive and started trading positive, where would we put our stop? Either where it opened, because if it came back down through there, what was it telling us? The bulls weren't in control. They were back in this trading range, close out the position. Now, not every trade's going to work, but the thing that makes an investor successful is knowing what is making that trade, or what makes that trade successful, and that if it doesn't work, you close out the trade very quickly. Unofficially, I would say that 70% of my trades are successful. Now, when I was a stockbroker and looking at futures and that sort of thing, everybody said, well, if you could hit futures correctly 50% of the time, you're going to make a fortune. So I thought, well, making 70%, I got to make big money. The important factor, though, is not the 70% of positive trading, but knowing what to do immediately on that other 30% to close out the bad positions very quickly. What is the difference between a fry pan bottom? This you would consider a fry pan bottom, a big rounding bottom. This would be what you consider a J hook, a strong price move, which is the result of a fry pan bottom. And I'll see if I've got some others. This is what we call the classic pattern. The fry pan bottom creates a strong price move. The J hook pattern, you can see how it pulls back. In this case, notice how it couldn't close below the T line. It started back up, so it's doing a J hook. So we know that this move right here is going to be the same magnitude as this move right here. We call it the classic because the strong price move out of the fry pan bottom usually leads to the J hook pattern. So, here's the things that help us immensely knowing what should happen after a doji. Look at the positive open. Looks pretty good. But now we can see, well, this is going to be a scoop pattern. There's a flat handle. There's your scoop. What do we expect coming out of a scoop? A good, strong slingshot effect. Comes up. What's your next pattern? There's your J hook pattern. What confirms this J hook pattern? A bullish engulfing signal, a doji sandwich. What do we expect out of a doji sandwich? More upside. I may look at that, and I can't look at them right now because we're on the PowerPoints. Ask, same as a cup and handle. The difference, JB, is that the cup and handle is usually relatively flat. Fry pan bottom, cup and handle. A classic pattern is usually a fry pan bottom, strong price move, and then a J hook pattern. Is trading 2 plus 2 not equal to 4? Trading 2 plus 2 is putting the different pieces of evidence together to get more enhanced probabilities that you're going to be in the right place at the right time. you put a stop loss right under the doji. If I was buying based upon this doji and it opened positive, yes, if it came back down through here, I'm closing it out. If I was buying this J-hook pattern because of the doji and it started trading positive, yeah, I wouldn't want to see it traded all back below that level. Okay, let's see. I think okay, let's see. So that's the dynamic doji. I'm going to go to the live charts, but before we do, again, this is kind of the setup that on July 25th, we're going to be spending a full day training. They're usually scheduled for 4 hours, but we never get done in 4 hours. They're usually 5.5, 6 hours. We're going to go through the top ranked signals and patterns. This is taking the information that you should already have accumulated about the 12 major signals and the patterns, and now we're combining that information to show you which ones are the strongest of all those signals and patterns. I got to see if this is, so that is what is, yeah, there aren't precise answers, but there is probabilities that we can put greatly in our favor. So hang on to your individual ones because you're probably going to see a lot of them just based on, let's see, do I have most of this chart on there, Rick? Let's see, I guess I can move this a little bit further this way and move this a little bit further. Ah, there it comes. Okay, that's mostly the chart. So before we, oh, this is the Dow. So before we start into the charts, this is how, I mean, we can analyze the market trend just as well as we can analyze individual stock positions. So we can see what happened here on the Dow at the 200. Basically, it ran into resistance. So at best, we're in a sideways market, or it might be drifting back to the 50. However, on the other side of the market is the NASDAQ. As we can see here, let me get rid of this. As we can see right here, we're still in an uptrend on the NASDAQ. So what's that tell us about our overall market trend? That there really isn't any major change. It's just shifting from sector to sector. So taking that information just on the Dow, or not on the Dow, on the Doji, going to have a little bullish flutter kicker right here at the breakout level. Then we had another kicker signal. ROL is still a good, strong chart. I'm trying to go through these in order, so you're probably going to see some duplicates here. There's your left-right combo on Ecom, which we're in right now. And there's your breakout level. Let's see if I can do this. Kind of your breakout level right here. And what happened at that level? There's your Doji sandwich. What do we know about your Doji sandwich? There's going to be more upside. Bullish flutter kicker. Let me see. This is the only one I can think of right now. A bullish flutter kicker is a dark candle, then a doji. Right in this case, it should have been just above where it closed. I can't remember which ones were the flutter kicker signals. But You know a Doji sandwich is Doji sandwich. Doji sandwich would be a bullish candle followed by a doji. Then a positive open, moving in the same direction. There's your doji sandwich. There's the doji sandwich in between. Now, a bullish flutter kicker would be that if this had opened here and closed here as a red candle, and then they gapped it up, that red candle now changes this from being a bullish doji sandwich to a bullish flutter kicker signal. But if you took out this little flutter and this was a red candle, then you'd have a true kicker signal. Oh, I don't know. Is this... No, but that is a good chart in the sense that there's your best friend. We'll write that one down. Is one more powerful? I would say the bullish flutter kicker is more powerful than the doji sandwich, just because it gapped up from the previous day's open, meaning the red candle, and then gapped up to the top of that and then went positive. That usually shows more power. I don't know. Let's see. Is that a reversal stage? It could be. That's a hanging man signal, one of your 12 major signals in the overbought area. Tells us if they open this lower, probably want to take profits. AHPI, I've got to go back and find some of these to, what was I showing? A left-right combo. A left-right combo right there. A doji followed by a bullish engulfing in the oversold area. It closes above the T line. That's your bullish confirmation when they open positive the next day. Hold on to your individual ones. You'll see a lot of them in here. ITCI, doji sandwich. This is your double doji sandwich. Bullish engulfing. And look at the visuals of this one. Where did the buying start? Right smack dab off the 50. Then we had a doji, bullish confirmation that broke this level. There's our uptrend. So again, this is nothing more than visually recognizing this, what human nature normally does. What did it, oh, so you can see where this fry pan bottom, or this kind of little scoop type pattern, doji, bullish confirmation. The gap up, we're still long this one because of the fry pan bottom. So somebody was asking about a fry pan bottom versus a J-hook. That's a fry pan bottom, a big rounding bottom. And what do we expect coming out of a fry pan bottom? You can stay long as it stays above the T-line. We're also in vivo because of the fry pan bottom. Make this a little bit smaller. Big rounding bottom, and notice what started the uptrend. Your doji gap up. There's your left-right combo. There's your doji sandwich. There's your curvature. How long do you hold on to this one? This is the nice thing about the T-line. It keeps you from getting whipsawed, even if you think you're seeing selling. Until you see selling and a close below the T-line, you just stay long. Amazon. Look at our little doji hammer morning star signal. What'd that tell us about our uptrend? It was still in progress. What happened after the morning star signal? A doji sandwich. Kind of a big McMuffin, telling you there's more upside. Our recommendation on GSX was also based upon that double doji, gap up, working out very nicely. Now I'm showing these because we're looking for things that tell us when there's been a change of investor sentiment or an improvement of investor sentiment. So not only are we trying to find the things that are putting us in the right direction at the right time, but putting us in situations where the probabilities of we're not just in a slow uptrend, we're probably going to be in a pattern breakout. So look at VIPs. We recommended this one this morning because of the best friend signal. And what was the best friend signal telling us? That this J-hook pattern was confirming we're probably in wave 3, which will be at least the same magnitude. Vary. There's your best friend signal. Let's get rid of that. What's that put us as far as probabilities? Wave 1, wave 2. Now your best friend gap up through the T-line. If this opens positive tomorrow, what's it telling us? The T-line's acting as support. It's confirming the best friend signal, and it's telling us this little comp. Steve had a hanging man. Do you think we reverse? The comp. I don't know what that means. Oh, the NASDAQ. Well, it could be a reversal, but so far we don't have anything confirming. So right now, all we can assume until we see a confirmed sell signal. And what would be a sell signal? If it opened here and closed down here, did an evening star signal. Okay, try to go through some of these real quick. There's your best friend on F5. Look where the best friend occurred. Double bottom, right smack dab off the 200. What's this tell us about what people are doing at the 200? Supporting and buying from that level. What do we expect from here? At least a 45 degree. Semi. There's your doji, doji, doji. Remember, if one doji means indecision, a bunch of dojis means greater indecision. There's your best friend. This one, if it opens positive, what do you got going on? A doji sandwich telling you the buying is still continuing. You're still heading up. Let's see. UPS. I think this was from a long time ago. Look at your doji gap up. Where was the next target? There's your bearish harami, telling you the buying had stopped. There's your bullish engulfing. There's your bobble breakout. Bobble breakout is a J-hook pattern, more defined, that you can see where it resisted and you can see where it broke out the second time. And notice how they broke out. There's your best friend signal. If you were holding on to this with a bearish engulfing, but you weren't quite in the overbought area, the strategy would have been it had to open positive and trade positive the next day to stay in it. So very simple logic built into candlestick analysis. Basically, it's just common sense put into a graphic depiction. Morning star signal off the 34. Your double doji type or double doji sandwich. Another gap up doji through the resistance level. Your morning star signal. Everything still tells you it's on an uptrend as long as it stays above the T-line. All right, I'll try to speed some of these up. ARCT, inverted hammer, gravestone doji, started the uptrend. SOGO, There's your bobble breakout. Failure, kind of a trend kicker signal, or I'm sorry, kicker signal. And then you had a doji gap up, left-right combo, wave 3. So just, again, if you understand how human nature works, you're going to put yourself in situations where you're in high probability trades an extremely high percentage of the time. Left-right combo, doji sandwich. How long do you stay in this one? As long as it doesn't close below the T-line. Sohu. There was your little doji gap up. There was your bobble breakout. We recommended this one not too long ago. When do you not chase a stock? If I see something that's doing what it's supposed to, this kind of alleviates that fear that you're chasing a stock that's up 3, 5, 10, 15, 20, 40, 80%. If it's doing the pattern that you expect, if it's up 15% when you're buying it, that means there might be another 80% to the upside. So we're not buying based upon the fear factor of whether we should be chasing something. We're buying based upon whether this pattern is confirming what it's supposed to be doing. So something like this, that's a big percentage move today for this stock. But you can see the doji gap up, breaking of the downtrend. Where do you think the next likely target is? Probably up here. So we're making our evaluations that the bulls have taken control. What's our upside potential? There was your morning star signal, right smack dab off the 50. This one's working very well for us right now. So somebody was emailing me today saying, how do you pick such good trades? How do you know what's going on? I'm not picking the trades. I'm just doing what the charts are telling me, because that's what human nature does time after time. So look at the series of dojis. This was brought up in the chat room. PRTS, it broke out. Look at all the indecision. Then they told you what their decision was, which meant there was more likely going to be some more upside. Did I do Fire Eye? Yes, did that one. NOAH. Look at your little hammer dojis gap up. That's what starts, that's what alerts you to something new happening in a price move. There's your inverted hammer doji, bullish confirmation. Just from my own statistics, I can pretty safely say that if you see an inverted hammer in the oversold area and it trades positive the next day, you've got a 95% probability or greater that you're going to be in an uptrend. OSMT, your morning star signal. Pretty good probability there's going to be more upside. Did I do click? Yeah, did click. Marna. You can see the doji sandwich. This is your McMuffin. Morning star signal followed by a doji sandwich. Kind of a scoop pattern. You definitely can be buying this one on positive trading. The probability is pretty strong there's going to be more upside. Now, does every trade work based upon a signal? Definitely not. But that's where you use the confirmation. We recommended this one today. Morning star signal. It opened but didn't execute. And you can see that it didn't work. So not only do the signals tell you when to get in based upon good confirmation, they also tell you when not to get in based upon the lack of confirmation. So here's another one. Marvell just broke out of this fry pan bottom, and look what it did today. a doji hammer or a doji hanging man. If this opens positive, what's it telling us? Our fry pan bottom breakout is occurring. Wave 1 and wave 3 is now in progress. FedEx. Whoops. When did FedEx get started? With that doji gap up. Uber. When did it start its uptrend? With that doji hammer gap up. So I'm showing these not because I've cherry picked and found things that we're confirming. It's just that there's so many observable times that you can see that a signal has worked. Left-right combo right off the 50. Now you've got the inverted hammer Morningstar signal. I'd be a buyer of this one if it comes back up through today's open. Henry, it doesn't matter. That's too much information. That somebody's buying this stock, no matter whether the insiders are selling or not. People upgrade and downgrade stocks, but the chart tells you what's actually happening. Could you briefly explain how you use the stochastics? If they're hitting bottom and heading up with a buy signal, that just adds confirmation. So let me see if I can find something that's more clear to illustrate. You're down here in the oversold area and you're starting to see buy signal. The Japanese logic is if you see a candlestick buy signal in the oversold area, the probabilities are pretty strong it's heading up. If you see a candlestick sell signal in the overbought area, it's pretty good probabilities it's heading down. What if a doji is very small at the end of an uptrend or downtrend? Does it have the same significance? Yes. And it usually has more significance if it's a very small trading range. That means there was indecision in the trading range as well as where they opened and closed. That's right. Paying their kids' tuitions. If the voter, okay, all right. Let me just bang through a few more here, and then. So the reason I'm showing so many is to get through the factor that the signal left-right combo works. The best friend signal works. Now on this one, wouldn't have executed. But we'd be watching it to say if it starts trading positive, this signal's still in effect. Doji best friend was on apps. This is, look at the breakout right here, fry pan bottom breakout. This is, we've been holding apps. We took profits because look at your doji in the overbought area and it gapped down. It was time to take some off the table. Again, we're not trying to sell at the absolute top. We're not trying to buy at the absolute bottom. We're trying to get that part, the high probability part in between where we can compound it. The more your correct trade or the higher your correct trade ratio, the more your compounding will expand your account very rapidly. You can see the Morningstar signal on LVGO. You can see where it broke out with kind of a little Morningstar signal gap up. You can see the doji sandwich. We're still hanging on to this one until we see a sell signal. Okay, and this one's been our big one over the last couple of days. We started buying right here on the close, getting near the close yesterday. And then in the last 30 or 40 minutes, it took off like a scalded dog and went up again. It was up 52% yesterday, and it was up another 30% or so today, or maybe 18%. But again, look at the pattern. There's your fry pan bottom, there's your cup and handle, there's your breakout, and notice what they did yesterday to get to the breakout level. They gapped it up. So just common sense tells us that the I forgot what I was reading, what Susan was saying. Do you take profits now? I'll see if I took some off today. We had huge profits. So I took off more than half the position. If it opens positive, I'll keep the other half. If it opens lower, I close out the position. Most people are happier than pigs in doo-doo if they can make 10% return on their account in a year. Wall Street just goes crazy if they can make 10% for everybody. We have the capability of seeing when things are exactly happening where you can start making those big trades. Would you still buy AOT? No. At this point, if I was buying it, I'd probably be buying it on the basis that I might be buying a, let's say, a 2250, 2750 spread where I've got less money exposed. So with it being up this big, I'm trying to minimize my exposure, but if I still want to take advantage of an upside move, maybe a spread would be much more effective. Do you each day give? Yes. Each night I put out 2 or 3 stock picks. Now, they're not for just being stock picks. They're so that you can go to the, it's about a 2-minute video. We kind of analyze what the market's doing. And then I'll put out 2 or 3 picks, not, again, in video format, so that you're learning why that pick is being recommended. The old adage, if you just tell people what to do, they aren't learning anything. They need to know why that's happening. It's kind of like the, I always tell the story about the cop standing on the street corner, and here comes this drunk weaving down the street with his car. The cop blows his whistle, pulls him over, walks up to the car and looks in the back seat, and there's a penguin sitting there. He goes, "What the heck are you doing with a penguin in the back seat?" And the drunk said, "Oh, I found him out on the street, and I don't know what to do with him." And the cop said, "Well, take him to the zoo." And the drunk said, "Oh, I didn't think of that." Well, the next day, the cop's standing on the corner. Here comes this drunk weaving down the street again, blows his whistle, pulls the guy over, walks up to the car, and the penguin's sitting in the back seat. He said, "I thought I told you to take the penguin to the zoo." Drunk said, "I did. He liked it so much. Today we're going to a baseball game." So you got to know why you're buying. That's what the purpose of all this is to learn what pattern setups are going to make you good, consistent money. Again, I was the worst investor in the world until candlesticks came along. And the one aspect that stands out in candlestick analysis is it makes sense. It's just common sense put into a graphic depiction. Everything that you will learn when you're learning candlestick analysis is you're going to say, "Yeah, I knew that. I just never looked at it this way before." YCBD had large candle, then when do you decide to buy a stock versus a call option? That's up to each individual. If you're an option trader, you're going to buy the options. If you're a stock trader, you're going to buy the stock. If you're a combination, usually if I'm buying calls, if I'm trading both stocks and options, I'm probably buying calls on stocks that are trading at 150, and I'm buying stocks that are trading at 7. I just base it on whether I can afford to be buying those stocks. So, all right. So remember, on the 25th, we're going to be walking through this in probably about a 6-hour training. This is what will really put the analysis into your head of what signals and patterns are setting up for big trades. And even though we're showing 15, 18 different signals and patterns, I emphasize to people that come to these sessions, go through it. If you recognize something that you really understand, or 3 or 4 of them, pick out 3 or 4 that you want to learn and become an expert at. That way you're not at the mercy of everybody else's opinions, everybody else's recommendations, and you eliminate your own emotions. You know exactly what those patterns should be doing, when you should be in, when you should be out. Oh, Carl, the best friend signal is your Doji gap up. And we'll probably go through some here as Alan, yes. If you're on the 30-day free trials, you have full access to everything that we do. That's right. Very was a good example. That's ones I'll probably recommend. That's your kind of your Doji gap up. Space right here. That tells you not only was there indecision, but now there's very strong decision of which direction you want to go. Cheryl, all right, I was going to wait until we did the double line. Lulu, it's good. You can stay long as it stays above the T line. You could be buying it on positive trading tomorrow and use the T line as your stop. Is very a Doji gap up kicker? No, it's not a kicker. Remember what a kicker has. A kicker has a strong or big candle to the downside and they gap it up and go the opposite direction. This is a Doji followed by a gap up. That's just the best friend signal. Okay, 1 request per person. Rick or Becky, you want to do a double line? There you go. And then 3.7 seconds, do the next double line. The end. Okay. SDGR. That's a J-hook pattern setting up. You buy this one on positive trading. Wave 1, wave 2, you can buy this on positive trading. You're watching to see what happens if it breaks out from this level. Here, just stay long. It's in the 45 degree. You stay long as it stays above the T line. Frog, morning star signal. If you were short, you would have covered the short today. Notice the downtrend started with a kind of spinning top gap down. Now you're in the oversold area and you're seeing a morning star signal. You can get ready to buy if it opens positive and starts coming up through the T line. PRNB, that's kind of a reversal signal. That's a bullish, almost a bullish, close enough to being a bullish engulfing with a booster. That's a good strong reversal signal. That booster is the tail to the downside, telling you they were still selling it and then reverse their decision. There's a bearish left-right combo. If you're long, it has to open positive and trade positive. If it opens lower after a bearish left-right combo, you want to close it out. FTDR, that one you can be buying as kind of a bullish flutter kicker. Notice how they gapped this up right about the same level it opened the previous day and went in that direction. Now it's trading positive, so you can buy this on a bullish flutter kicker on positive trading telling you they're breaking this little downtrend. Work traded lower today, but came back up. Notice where it came to. Came right back down to the 50-day moving average, acted as support, which means if this opens positive tomorrow, the consolidation's over after your buy signals, and if they break through this level, they're coming up here to at least fill this gap. Micron, nothing. It's in a wedge, just sideways. I wouldn't be long or short. You stay out of this one until it breaks that wedge one way or the other. Boeing, if you're short, you stay short. But it's not, yeah, that's the only thing you'd be doing on this one is staying short. Definitely would not be long in that position. Graph, stay long as this stays above the T line. Jets, stay short. You can see the slow curve failure at the T line and your Doji gap down. They couldn't hold this level. They couldn't hold the 50. There's a gap to fill right here, so you stay short on this one. Cirrus Logic, you just stay long. Here's an added benefit of the T line. Because nobody has it, we do. Every time we see it come back down and hit the T line and bounce back up, remember, nobody else has this. So this is a natural support level. When they hit that level and bounce back up, that's added credibility that the bulls are in control. ISG or INSG, another one that bounced off the 50. Not a real enticing chart. I would probably be more apt to buy it if it broke up through this level. Right now, it's just not real, what I would call real aggressive looking. C R D F. You stay long, but if this trades back lower tomorrow, below the T line, close it out. Telling you this level up here has been acting as resistance. It needs to see a strong move to confirm your morning star signal. COCP. Stay long, but notice your hanging man signals. I would be careful. If it opens positive tomorrow, I'd start taking profits. And SRG, if you're short, you stay short. NXGB is not coming up. Restoration Hardware. Pretty much sideways. You've got a slow fry pan bottom, but I'd probably be more apt to buy it if it breaks up through this level. It needs that fry pan bottom breakout. And we bought Upworks on the close today with the idea that they've kind of broken out through this fry pan bottom. There should be more upside. A lot of these patterns are breaking out. We bought GDS the other day. You can see wave 1, wave 2 going into wave 3. So anytime you see a big price move, pretty good indication. This is Walmart. The bigger the signal, the more compelling there's a change of investor sentiment. The bigger the signal, the more compelling that there's a change of investor sentiment. AMC. You can get ready to buy this one, but you would definitely want to see some strength. Is that a Morningstar buy signal with best friend double Doji kicker hammers? Yeesh, that's a... It's just some consolidation. It does have buy signals, but nothing yet to tell you there's a strong reversal. You had an inverted hammer, bullish left-right combo. You failed at the T-line the first time, so it's buy signals. It's just they haven't been confirmed yet. You need something strong. I think we did GAU. If this opens lower tomorrow, you close it out. You can see the sellers are starting to take control. Maxar, nothing right now. It wouldn't be long or short. Looks like you're in a trend channel, and you're still below the T-line, so there's nothing there to get excited about. Advanced Micro did break out finally. Look at the T-line crunch. T-line crunch. There's your Morningstar signal with your best friend starting the third side. There's it trading as a T-line crunch. T-line crunch pushes you right up through a resistance level. Now you want to see if it can break out through this area. Coles, nothing. It needed to open positive and trade positive today. The fact that it closed back below the T-line. If I'd bought this yesterday, I would have closed it out today. That's that 30%. Oh, I wouldn't go short. I just wouldn't be long. Wafu, kind of a little left-right combo. You can be buying this one on positive trading. Snap, bullish Harame Doji. Very simple. If it opens lower, you consider taking profits. If it opens and starts trading positive, you can keep it. If it opens and trades, especially if it trades back below today's low, you want to close out the position. That's the Doji Harame. Fuel cell, stay long, but it has to open positive tomorrow. FGEN, probably wouldn't be long or short this one. No direction. AXGT, bullish engulfing, Doji sandwich setup. You can buy this one on positive trading. Watch to see what happens once it hits these moving averages. The Russell, bounced up off the T-line, so it's not really going anywhere. It's still in this wedge type formation, which doesn't bother us as candlestick investors, because if the market's moving sideways, not showing any great selling, simple scans will find the strongest bullish charts, which means they aren't going to have that much deterrent as far as heading up, because the market's relatively flat and something's going on in each one of those individual charts to make them a strong chart. Cisco, another one you could buy on positive trading after the gap up, kind of breaking this little downtrend. And CTIB, nothing. I'd have my money someplace else. No direction on that one. CNK, and nothing great there yet. Still trading this little range. It needs to see a strong buy signal to get it moving. This one is nothing. Is it ERII? That one, if you're short, you stay short. Ever since kind of your bearish flutter kicker to the downside. Dollar Tree, nothing. Wouldn't be long or short at sideways. This one you stay long. Your safety stop should be the T line, because if it comes down through there, that means it's coming down through the low of the Doji today that's in the overbought condition. Is a Doji with a gap down? Yes, that's a bearish best friend signal. Still represents the same thing. After indecision, they've told you which way they're moving with great force. PEIX, nothing there either. Kind of looks like a wedge formation. Would not be long or short this one. And Daku, you stay long, you put your safety stop at today's open. Logic says if you're up here in the overbought area, starting to move away from the T-line, and a Doji gap up, if they come back down through the low of that Doji, they're selling off, heading back to the T-line area. STXC, that one's not coming up. Let me try it again. STXC. No, that's not working. X-ray, if you're short, you kind of your Doji gap down. APT was, I was going to say it was starting to head back up, but there's still no real energy in this one. If you're buying this one, I'd wait for it to come up through this level to buy. And NVAX had been acting reasonably well, but notice where they gapped up with the Doji and sold off. That's where you should have taken your profits. More than likely, they're coming back to test the T-line. Now, here was the buy. Look at your wedge breakout with a Doji sandwich. That's where we started getting in on this one. QGEN, that's kind of a double bottom. Kind of an obtuse bullish flutter kicker. They gapped it up, Doji, little selling, and then another trend kicker. A trend kicker is, look how they opened it here and closed it here. It was already in a trend. It wasn't at a bottom. And then they gapped it up again. So that trend kicker implies more upside. We closed out CZZ today only because we still have a bobble breakout. I'm sorry, a breakout. Look at the kicker, trend kicker breakout, but it never got started. It needed to open positive and trade positive today. You can still buy this if it comes back up through the close of that day. That tells you that the consolidation is now over and that the trend kicker is still in effect. Pen, nothing. It did bounce off the 50, but it's still below the T-line. I would wait for another strong signal to break that downtrend. Let's see, UI. That's kind of your bullish flutter kicker. Down day, gap up. That one you can still be buying on positive trading. And we did AMD finally broke out with this T-line crunch. OCGN, nothing there. That's a penny stock. And I say nothing there. Looks like it's very low volume. That's why it's lots of Doji. I'd be very careful on this one. Tesla. Whoops. Tesla, you can see where it got exuberant. Look at the little slow curve breakout. Doji, selling. Not real compelling selling. And it's still trading up above the T line, 3T line. 3T line works in conjunction with the T line. Logic says if it's above the T line, you stay long. If it's above the 3T line, you still stay long. It's much stronger indication the bulls are in control. But I would have a safety stop if I was long, that if it came back down through today's low, that's the selling starting up there. NIO, I think we did. You just stay long on this one. Just as a safety stop, I'd have a safety stop at today's open. Pixel works and nothing. I doubt if you could be short, but I definitely wouldn't be thinking of going long yet, especially with it still trading below the T line. Snap, we did. Use today's low as your stop. FTNT, be ready to buy this one on positive trading, because that would kind of tell you there's a breakout of this fry pan bottom pattern. AIKI, that's an ugly chart. They run it up and pull it back. Let's see. You do have a big fry pan bottom. I'd be buying this one with a confirmed strength. I'd rather pay for it up here, knowing that it finally broke out. INO was trying to come up, but nothing yet. Still would not be long or short this one. Versus 6, we still have this many. All right. Chewy. Stay long. Look at your buy signal right off the 50. Look at your Doji gap up. Giving you, now you're right here at the breakout level. You stay long on this, you could even be buying on positive trading. SGEN, all you can do here is stay long as it stays above the T line. YCBD. Let's see. Mary, you had a question earlier about all the dojis. That would have been a toughie to stay in. You can stay in this one, but I'd put a stop just below today's low or today's open, because if it opened and came down through there, you'd have doji, bearish engulfing. That would tell you this is pretty much where they're starting to sell. Okay. And Marna we did, I think. Marna, you can be buying this one based upon kind of this little slow curve, morning star signal, doji sandwich. You especially want to see it break out through that level. All right, trying to get through these so people don't fall asleep in front of their screens. Baba, stronger than bear's breath. Look at your doji gap up through the resistance level. Then your trend kicker. Right now you stay long. I would have a safety stop at yesterday's close. If it comes down through there, the profit taking is continuing. Clean energy. Another one where your doji is going to tell you what's going to happen. If they open it lower, you want to take profits. If you're long, it needs to open positive and trade positive. KLR is not working. NKLA, I bought some calls on this one today because there is your kicker signal. And where did your kicker signal occur? Right after they hit the 50. They closed right smack dab on the T-line today. If you're going to buy, you could buy on positive trading, especially if it came back up through today's open, because that would tell you they're probably heading back up to this level. plan. You have a hanging man, but it's supported at the T-line. Another one that if it opened lower, what would it be telling you? It's confirming the hanging man in the overbought area and telling you this level right here is continuing to act as a resistance level. How is about Lulu? How is about Lulu? I don't know. Lulu, you can buy on positive trading as long as it stays above the T-line and you put your safety stop at the T-line. HMI. There's your trend kicker. You're in the overbought area. Up pretty strong. Keep your safety stop now at today's open. It shouldn't come back down through there. Kirkland, probably backing off a little bit. Yeah, still pretty strong though. Here's your fry pan bottom. I would stay long. I'd have a safety stop right there. If it came back down through there, the sellers have taken control. What makes you say AMD finally broke out instead of the last few times? It is the close above the T-line. It was the close above the 50. You could see that that was going to be a resistance level. And prior to that, look where you were. You were kind of in this sideways channel. But when they broke out through the 50, where do you think everybody and their brother is watching? They're watching to see what happens at the breakout level. We could tell what was happening based upon the fact that the buy signal still was very slow. If you were long, you could stay long, but I wouldn't be a buyer until it broke out through that level. So that's why you can watch a T-line crunch, because the results are very probable. But if they have a T-line crunch and they break through the resistance level, that's where everybody's going to start rushing in. And Bidu, all you can do here is stay long ever since your gap ups. Cree was setting up nicely. Yeah, I'd be more interested in seeing what it does up through this level, but it looks like it's trying to get to that level. So above 63. Yeah, just above 63. Question about your moving average. Is it simple or exponential? Susan, which one? The T-line is the 8 exponential. The 50 is simple. The 200 is simple. I think this is the 34, which is also exponential. The SPY, as we saw, came back up above the T-line today. So even though it's not trading up, it's not trading down, just trading flat, which again gives the opportunity to scan to see which stocks are the best. You can see where the breakout occurred on NVIDIA. All you can do here is stay long. Again, you're in the overbought area, so you put your safety stop someplace where it shouldn't trade. In this case, I'd put it just below today's low, which would also be below the 3T line. RCM, that's a good J-hook pattern. This is why knowing what the characteristic of each signal tells you. Indecision, pullback, indecision, pullback, indecision, bounce straight off the T-line. That pullback telling you they aren't selling off with any great conviction. That's when you start watching for the next buy signal. Not sure if the last 3 days of signals means anything besides setting up for, yes. When they're pulling back indecisively, based upon you being able to witness that by the nature of the candles, that's more apt to be indicating that they're ready to buy it. Match wouldn't be short, but it wouldn't be long right now. The T-line is the 8 exponential moving average. It's your strongest signal or indicator in conjunction with candlestick signals. It acts like a natural support and resistance level. It's the 8 EMA, correct. All right, Diane, you get a good night's sleep. And Cyber, as you can see, did not resist now at the T-line. I'm sorry, at the 200. You stay long on this one. Pin interest. Did a Doji. You have your safety stop at today's low. GM. Get ready to go short on this one, a bearish J-hook pattern. Any good short entries? SYY can be shorted. NOC, whoops, that already headed for the, that one still can be shorted, wave 3 to the downside. Are you covering different patterns? The 5-pin bottom J-hook, they will be mixed in there. All I'm doing is putting them into a quantitative list so that you can see what combinations work the best. Everything that we do in these sessions, you've already seen before. Now you're just seeing them in a different light or a different classification. Jake, that's what we're going to be doing on July 25th, is going through the top ranked signals and patterns. It's going to be about a 6-hour session. And like most of them, it's going to be constant repetition of different patterns, why they set up the way they did. So that repetition is effective. So the next time you see a chart, your eye instantly recognizes that being not only a good pattern, but a stop or a very strong pattern. Members will be able to get this recording, yes. Okay, everybody, I've kept you way past your bedtime. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.